The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
Welcome to the 5-Star Weekly Briefing, your pulse on the hospitality industry.
This week's briefing is brought to you by Canary Technologies, the #1-rated guest experience platform, helping hotels eliminate paperwork and boost revenue through seamless digital check-in and upselling.
So getting right into it today, we are really witnessing what I'd call the death of generic luxury.
Oh, absolutely. The whole one-size-fits-all cookie-cutter 5-star model is, well, it's pretty much a thing of the past.
It really is. If you look at the major development announcements crossing our desks recently, there's this massive shift toward hyper-specific targeted expansions.
Right. They're designing these properties for very distinct traveler identities rather than just a broad luxury market.
Spot on. And a prime example of this is Outrigger Resorts and Hotels. They're rolling out their new Premier Suite collection right now.
Yeah, Sean D is heavily driving that rollout, isn't he? Across Fiji, Waikiki, Thailand, and the Maldives.
He is. And what they are doing in Fiji with those new pool burrs, which are essentially these massive upgrades to the traditional thatched roof bungalows, it's fascinating.
Because it's not just about, adding a higher thread count to the sheets or nicer soaps.
Exactly. It's a calculated structural pivot to capture the multi-generational travel market.
Which is booming.
Oh, it's massive. And when a family spans 3 generations on a single trip, the physical demands on the space just change drastically.
Yeah, I mean, the grandparents want that high-touch, classic luxury resort experience, right?
Look, the parents with young toddlers, they need a functional kitchen. They need acoustic separation.
So the kids don't wake up the whole resort.
Exactly. They require a private, shared living space that doesn't involve wrangling kids in some crowded public lobby.
I want to look at the broader operational shift there, though, because it really feels like this residential-style push from brands like Outrigger is... Well, it's the hotel industry finally going on the offensive against premium Airbnb rentals.
Oh, for sure. For years, the short-term rental market completely dominated that home away from home narrative.
Right, and now hotels are saying, okay, we'll take the exact spatial footprint that made Airbnb successful, the multi-room villas, private pools, full kitchens, and we're going to layer institutional world-class hospitality service right over the top of it.
Which is brilliant. You get the sheer square footage of a private house, but you completely eliminate the chore of stripping your own beds or taking out the trash.
Yeah, no one wants to do chores on vacation.
Yeah.
You get the concierge, the 24-hour room service, daily housekeeping. It's basically institutionalizing the short-term rental model.
Speaking of hyper-targeting, we're seeing similar moves in the corporate space. Look at Crowne Plaza's dual strategy in Australia right now.
Oh, the Plenary Group and IHG project.
Yeah, the $130 million opening on the Geelong waterfront. That one is squarely aimed at the traditional corporate and leisure mix.
But then you contrast that with their new Melbourne Carlton property.
Right, which is integrating deeply into the local culture through its Fico restaurant and bar. It's a totally different vibe.
Langham Hospitality Group is doing something similar, but for a completely different demographic. They just signed a deal to debut a luxury property in Jinan, China by 2029.
That's their first entry into Shandong province, isn't it?
It is, yeah. But the real story is the specific location. Bob Van den Noord is planting this flag directly in the century-old Honglu CBD.
The Central Business District.
Right, but this isn't just a standard financial hub. It is rapidly becoming a massive epicenter for quantum technology and AI.
Wow. Designing a physical asset around the psychological needs of the tech elite that requires a completely different playbook than your standard corporate hotel.
Yeah. Oh, totally. If you are a visiting executive negotiating a multi-million-dollar AI infrastructure rollout, your priorities are highly specific. You need absolute high-end privacy.
And probably somewhere impressive to entertain stakeholders.
Exactly, which Langham is answering with their signature Tang Court Cantonese restaurant. But most importantly, operating in that hyper-competitive tech environment means you need a dedicated place to decompress.
Which explains their integration of the holistic Chuan Spa. They are physically building this hotel to serve the metabolic needs of the quantum tech traveler.
It's incredibly bespoke. But then you contrast all that layered luxury with what Centaur Hotels and Resorts is doing over in Japan.
Right. They are launching the 300-room Centaur Life Namba Hotel Osaka.
Yeah, and Andy Ngo is aggressively marketing this property to what they're calling the smart traveler.
Oh, I saw that.
They highlight flexible social spaces, a rooftop lounge called Sora, and elevated essentials.
Okay, let me stop you right there, though. I have to question this. What does smart traveler actually mean in this context? Because, is this just clever marketing jargon? Is it designed to mask a stripped-back, budget-cut operational model where they simply offer less and rebrand it as smart?
Look, I get that on the surface it sounds like spin, but it is actually a genuine operational evolution towards high-efficiency luxury.
How so?
Because modern travelers, especially in a hyper-dense urban market like Osaka, have completely redefined what luxury means to them. They no longer view a sprawling, empty lobby with a harpist as a premium experience.
Yeah, that's true. It's more of an obstacle.
Exactly. They view it as friction. They want absolute seamlessness. They want a premium mattress, incredible water pressure, ultra-high-speed Wi-Fi, and a vibrant rooftop bar to grab a cocktail before exploring the city.
Right, so by eliminating the bloated traditional services that these guests just ignore anyway, Centara can reallocate that capital.
Spot on. They reallocate it into the spaces that actually drive revenue and satisfaction, like that Sohra Lounge. It's the reallocation of luxury, not a reduction of it.
That makes a lot of sense. And we are also seeing operators double down on long-term luxury lifestyle projects too, like IHG signing the Kimpton Kota Kinabalu for a 2031 opening in Malaysia.
Bringing a design-led retreat to the Tanjung Aru shoreline requires a massive amount of long-term confidence.
It really does. And long-term confidence is the key phrase there, especially when you look at the macro environment.
Yeah, the new PETA forecast.
Exactly. The Pacific Asia Travel Association just released their 2026 to 2028 forecast. The optimistic headline is that inbound arrivals to the Asia-Pacific will finally exceed pre-pandemic levels today, actually, in 2026.
Which is a huge milestone.
It is. Their baseline projection targets 761.2 million arrivals by 2028. But the crucial piece of that report was Noor Ahmad Hamid's severe warning regarding market volatility.
Right, the PATA CEO outlined a very specific lower bound scenario. He warned that if macroeconomic and geopolitical volatility persists, that arrival number could plummet to 599.7 million.
Which is a negative swing of over 160 million travelers.
A 160 million traveler deficit is an existential threat to leveraged operators. Because in the hotel business, your fixed costs, your property taxes, debt servicing, energy bills for a 300-room building, they don't magically drop when your occupancy plummets.
No, they stay exactly the same.
Right. So when growth stops being linear, that kind of variance means the difference between recording a banner year and failing to make payroll.
So with that PATA warning in mind, let me ask you about Intrepid Travel's recent acquisition.
The Ooraminna Station homestead.
Yeah. Intrepid, a company historically known for its tour operations, just bought this massive 200-hectare outback property near Alice Springs. They're framing it as a pivot to experience-led, nature-based accommodation.
Okay.
But if PATA is actively warning about a 160 million traveler drop, isn't shifting from a flexible tour model into owning fixed real estate incredibly risky? I mean, if a tour doesn't sell, you just cancel a bus.
Right.
But if the homestead is empty, you still have to maintain 200 hectares of infrastructure.
It sounds risky until you analyze it as a geopolitical hedge. Intrepid isn't just buying a farm. They are buying an insurance policy against global supply chain and border volatility.
Oh, I see. Capturing domestic demand.
Exactly. When international borders become restricted or currency exchange rates go sideways, domestic travel surges, people look for safe haven experiences within their own borders.
So by acquiring a physical asset in a unique domestic environment, they capture that high-margin local demand.
Yeah, it acts as a massive financial buffer against those unpredictable swings in international arrivals. They are controlling supply in a market that's insulated from global shocks.
We are seeing operators deploy optimization strategies in urban centers to insulate themselves, too. Look at the Belmo Group.
Right, they just acquired the heritage-listed Royal Albert Hotel in Brisbane CBD.
And they aren't buying a 111-year-old boutique property for the architectural prestige. They're specifically targeting underperforming legacy assets to plug them into their revenue optimization model.
Brisbane is such a fascinating micro market right now. You look at the Brisbane Airport Corporation. They recently launched a search via JLL Hotels for operators to run 2 brand new developments.
Yeah, a mid to upper tier hotel at the International Terminal and a mid-scale property in the Skygate precinct.
But why build 2 massive new transit hotels when the PATA forecast is warning of structural downturns?
Because transit hubs operate as distinct microeconomies. They are significantly insulated from broader regional tourism dips. Even if tourists aren't choosing your city as a destination, global logistics dictate they still have to transit through it.
Ah, flight delays, crew layovers, that sort of thing.
Exactly. It creates a captive audience. They are banking on the mechanics of global transit, outlasting any temporary dip in regional leisure travel.
But then you analyze the asset strategy of Aries management in Vietnam, and the playbook completely changes.
Oh, with the Hyatt Regency Da Nang Resort and Spa.
Yeah, we are talking about a massive beachfront asset, 410 keys across 20 hectares. The property just posted a record-breaking performance in 2025. Yet immediately after hitting those numbers, Aries hired CBRE to explore a full divestment of the property.
To borrow a concept from the stock market, they are executing a textbook sell-at-the-top strategy.
Selling at the peak.
Exactly. Highly disciplined asset managers do not wait for the pay-to lower bound scenario to materialize. They put the asset on the market the moment their trailing 12-month revenues peak. You secure that peak valuation and let the next buyer assume the risk of the impending volatility.
But for the operators who are holding on to their properties through this volatility, the urgent question is, how do you protect your margins?
And the clear answer across the industry right now is a structural push into operational resilience and core technology.
Which we're seeing physically manifest at the Adina Apartment Hotel Perth. TF Hotels is doing a multi-million-dollar rolling refurbishment.
But Chris Sedgwick mandated the hotel remain completely operational during construction, right?
Yes, which is an absolute operational nightmare. Usually, noise mitigation and dust control tank your guest satisfaction scores.
But shutting your doors completely tanks your cash flow.
Exactly. So surviving that requires highly sophisticated tech systems that dynamically isolate construction zones from guest flow in real time.
Speaking of optimizing guest flow, the Holiday Inn Suva just launched Fiji's first cashless self-service kiosks.
Oh, to bust those peak check-in queues?
Right. It gives guests flexibility, sure, but the underlying mechanism is pure margin protection. It protects the front desk staff from being emotionally overwhelmed so they can focus on high-value interactions.
And this reliance on tech to solve operational bottlenecks is heavily reflected in the capital markets. The Abode Worldwide Hospitality Tech Investment Index just revealed the sector secured a staggering $1 billion in funding over the last year.
$1 billion? That's massive.
It is. But I want to break down exactly where that capital is going. Out of that total, $408 million was concentrated entirely in property management systems.
The PMS.
Yeah. Muse secured $300 million, Kindred raised $125 million, and Canary Technologies locked in $80 million.
We're also seeing a surge in AI-native startups like Chatlain getting funded.
Right. But honestly, that massive concentration of capital into property management systems is the equivalent of fixing the hotel's plumbing, rather than just painting the facade.
That's a great way to put it.
For the last decade, this industry was so distracted by shiny gimmicks, robot butlers, iPads in every room, that people just used as alarm clocks.
Yeah, totally useless for the bottom line.
Exactly. But deploying over $400 million into PMS proves operators are desperate for core structural fixes. True innovation today is a stable back-end system that automates workflows and mathematically protects the operating margin.
There is also a fascinating intersection happening right now between that operational tech and behavioral psychology.
Oh, the food FOMO study.
Yes. Saba Hospitality is leveraging this recent Opinio study, which was actually commissioned by Burger King Germany initially. It found that 50% of diners and 68% of Gen Z consumers suffer from food FOMO.
Okay, I have to push back on this. Are we really classifying food FOMO as a legitimate psychological barrier? Or is this simply Stefan Renzihausen and Saba Hospitality using a brilliant excuse to visually upsell a younger demographic on premium sites?
The brilliance of the system is that it's entirely both.
Really?
Yeah, picture a 22-year-old Gen Z guest by the resort pool. They have to wave down a stressed-out server, they feel rushed, they don't want to ask what comes on the sandwich, and they feel judged if they take too long.
That's fair. Social anxiety is real.
Right, and that emotional friction leads them to order the absolute bare minimum just to end the interaction. But if you provide a visual mobile menu on their own device, you remove that anxiety entirely.
So they customize their order in peace.
Exactly. And because the anxiety is gone and the screen is prompting them with high-res photos, they're statistically far more likely to add the truffle fries and the $18 cocktail. It solves the friction and drives up the check size.
That's actually brilliant. Executing these hyper-targeted brand standards, deploying these billion-dollar tech platforms, and navigating all this macro volatility, it requires an elite level of human capital.
It really does. You need leaders who understand the boardroom strategy and the reality of the hotel floor.
Which is why the strategic appointments we're tracking this week are so revealing. We're seeing major development pushes signaled by moves like Narej Farrick stepping in as Chief Development Officer for Amora Hotels and Resorts.
And Mike Morey taking over capital markets at Peachtree Group. Plus, you have heavy hitters moving into operational oversight.
Like Dean Dransfield taking the CEO role at Salter Brothers Hospitality, and Alex Shepard moving to Bangkok as GM for Marriott.
But the appointment that truly bridges everything we've discussed today is the Ascot Limited bringing in Chris Watson as their new CTO.
Yes, because scaling global tech infrastructure right now requires a leader who knows that if the software doesn't seamlessly integrate with the guest journey, the investment is totally worthless.
And we are seeing that exact same bridge being built at Canary Technologies. They just appointed Diraj DJ Singh as their new general manager of commercial.
Moving from the traditional hotel side directly into tech. And if you connect his appointment back to that $80 million raise Canary just secured, it makes perfect sense. Tech companies are realizing they can't just hire software engineers out of Silicon Valley and expect them to understand the operational chaos of a hotel.
No, they're actively recruiting traditional commercial operators like DJ Singh. You need someone who can translate brilliant code into a tool that actually makes sense to a stressed-out front desk agent at 4:00 p.m. on a Friday.
Because if the tech fails the front desk test, it fails entirely.
It has to be grounded in operational reality.
Absolutely. So as we wrap up today's briefing, I want to leave you, our listener, with a provocative thought to evaluate within your own operations this week. Take a hard look at your capital expenditure and your operational focus for the next 2 quarters. Ask yourself honestly, are you investing in the plumbing? Are you funding the core systems that build resilience against that 160 million traveler volatility and protect your margins? Or are you simply painting the facade, chasing the next shiny tech trend, hoping it masks the operational cracks in your foundation? Because when the market inevitably shifts, it's the plumbing that keeps the building standing.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry.
Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world.
Until next time, stay well and stay ahead. See you next week.